I'm going to briefly go over socially responsible investing and how we address it at AIO Financial for our clients. So we do have a free SRI ebook. You can find it at aiofinancial.com/resources. You can download the ebook if you want to look at this in more depth. Here's my contact information. If you have any questions, feel free to reach out. So SRI, sustainable responsible impact investing, or socially responsible investing, or environmental social governance investing, it seeks to maximize financial return and do good, do something positive. So some of the portfolios we look at, some of our clients have some SRI, some of them have all socially responsible SRI, and some are addressing a particular issue. Investment returns are pretty competitive. The solid blue is the S&P 500. The lighter blue single line is a fund called VOTE, VOTE. It's an ETF. They don't do any screening. They're just following the S&P 500. So you'll see the returns are very, very similar. They engage, their expense ratio is 0.03%, and they are 0.05%, sorry, and they are engaging with companies. As shareholders, they are engaging. They got 3 environmentalists put on the board of directors of ExxonMobil. They're engaging across the board. Their focus is environmental issues. Not that this is not investment advice. We're just explaining some of the options out there. Another fund that does do screening. So the S&P 500 has about 11% in fossil fuel companies. The yellow fund does not have that. So when fossil fuel companies underperform the index, when tech stocks are doing great and fossil fuels are underperforming the broad US average, then you'll see these screened funds do better if they are very light or don't hold fossil fuel companies. Some hold best in class. They'll hold some kind of natural gas or some kind of fossil fuel company. Some of them are fossil fuel free. And when fossil fuel companies are outperforming, you'll see these ETFs underperform the S&P 500 or an index. So there are funds for international, small cap, international emerging, bonds. There's all types of funds that are available in SRI. The expense ratios have gotten very competitive, and there are studies of studies showing that the performance is very similar, very similar to just a normal low-cost index. So what are the methods for SRI, the strategies? One is screening, including or excluding companies. The other is shareholder advocacy. As a shareholder, the fund can engage with companies. And if you get a fund that has similar values or is pushing for in the same direction, they'll engage on your behalf. You don't have to vote on shareholder resolutions or bring them up. The other is community investing, providing capital, lending to organizations or individuals that might not have access to capital. So screening, we're excluding or restricting or including based on the industry, based on the country, based on the corporate social responsibility, based on policies and practices. Ways they get involved: voting, letters, filing resolutions. Again, you don't have to do this. This is what the funds will do on your behalf. So you just want a fund that engages or has the similar values, similar goals. And if the funds don't vote, management is voting for them. So normal index funds are not voting on ESG if they're non-SRI in general. So that's why it's important to pick funds that are in line with your values. These are some of the areas that they engage on: climate change, corporate political influence, environmental management, governance, health, safety, human rights, diversity on boards of directors, CEO, executive compensation. There's a lot of issues that they can engage on. Community investing is providing capital for low-income communities that otherwise would lack. That can be done through community development banks, credit unions, loan funds, venture capital funds, and micro enterprise loan funds. We have a tool that we use, Your Stake, which does show the impact of your funds, shows the engagement and how they're engaging, what kind of issues they're engaging on. It also helps us screen funds so we can look at the expense ratios, we can look at how they are in different areas that may be important for our clients. And so this helps us select the funds that we want to use. That's it. This is a real brief intro. Feel free to set up a meeting. If you go to AIOfinancial.com, you can schedule a free meeting. We'd be glad to discuss your financial situation and the services we provide. Thanks a lot.